Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Make sure to check out our website and also make sure to subscribe to our YouTube channel. In today's podcast, I wanted to discuss the Trump payroll tax cuts. In order to help support the economy as a result of obviously negative impacts from the coronavirus, Trump proposed cutting the payroll tax immediately until the 2020 election in November. And this would be pretty big news if it were to pass because it's a lot of money, but also it would be additional money in the pocket of consumers. And there's not a ton of details about it right now. He's just proposed it, and it doesn't seem that it's gone over too well on Capitol Hill based on various sources. But this isn't the first time this has come up. It came up last year during the government shutdown, and it's come up a couple times before. For example, President Obama passed a similar measure in 2010 during the financial crisis where he cut payroll taxes by 2%. And people are estimating that if it did this again right now, that it would add about $150 billion back to consumers if they were to do it just on the employee side. And if they were to cut the employer side, then it would be about $300 billion of stimulus in total. But the problem with this is that it puts money back in the everyday consumers' pockets, right? But it doesn't really help the government because the government raises a lot of money from this. So of course the Democrats are against this, but the Democrats are against it just because the Republicans are for it and Trump is for it. And the Democrats, what they want to do is they want to roll back the Trump Tax Cuts Act of 2017 so that they can get more money into the government and then somehow dole that out to the common man. I'm not sure how they would do this. And that would be a big political win for the Democrats if they were able to get rid of Trump tax cuts before the elections. It would be a win for the Democratic candidate, whoever that ends up being, especially if it were Bernie Sanders, because Bernie Sanders wants to raise the tax rate overall. And the thing to remember, too, is there's an employee portion of the payroll tax and there's an employer portion of the payroll tax. And so with that, let's get into the specifics of like what payroll taxes are. So what they're referring to when they talk about payroll taxes is the Social Security tax and the Medicare tax. And the Social Security payroll tax is 6.2% for employees, but there's also an employer portion, which is also 6.2%. And you have to pay this on wages up to $137,000. So if you make more than $137,000, then you just pay the 6.2% on the $137,000. You don't pay it on the extra money that you make. And then for the Medicare tax is 1.45% for employees and 1.45% for employers. And there is no base wage limit for this one. So like what would the impact be on the federal budget, being we're all accountants here? So there would be a pretty big federal budget impact. And I'm sure there's already going to be a federal budget impact just because wages are probably going to go down. Employers are probably going to decrease wages, but also they're going to fire people, or some employers are just going to go out of business. So the number will already decrease. But based on the federal budget the way it is, there's $949 billion that the government projects for revenue from Social Security tax alone, the payroll tax. And then there's $289 billion from the Medicare tax. But so like in total, between these two payroll taxes, the government plans to earn over $1 trillion from the payroll tax in 2020. That's a lot of money to just give up and give back to consumers. And that's probably why Democrats are a little bit hesitant because where else would you get that money from? If you're a politician, you're not really going to give up a bunch of money without getting something in return. And just to compare that from individual income taxes are estimated to be about $1.8 trillion in 2020. And I'm sure those will probably come down as well. I mean, they won't be reduced by the government, but just based on the economy going down. Another issue that people have with payroll taxes and why the Democrats should be in favor of reducing them is because they're regressive. And the people believe they're regressive mainly because of Social Security tax. The Social Security tax has an upper income limit. So this means the wealthier you are, the less taxes you pay as a percentage of your income. So that's another reason why payroll taxes are controversial. So if they were to lower the payroll tax or reduce it or get rid of it, it would help low wage earners, people that don't make a lot of income, because they wouldn't have to pay as much tax as a percentage of their income. But it would also help employers because employers have to pay the employer share of payroll taxes. And the way that employers oftentimes make up for this is they pay their employees less. Because if they pay them less, then not only do they have to pay less in wages, they pay less in payroll tax. So if the government gets rid of this payroll tax for a period of time, it'll encourage employers to keep their employees. And that's really what they're hoping for here. They're not just hoping to put money into people's pocket. They're hoping for employers to keep their employees employed. So that's just the overview of the payroll tax cuts. If you want to stay up to date on Big Four accounting firms and anything accounting related, make sure to subscribe to this podcast and make sure to subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.